Good afternoon, everyone. I'm Laz. Welcome to the Midday Update. We're going to keep it short and sweet here on this Monday morning. We're going to jump right into charts. We're going to talk some SPYs. We're going to talk general market indexes. We're going to look at a couple of symbols. A little bit of a quiet session. Came into a gap down this morning. You can see SPYs gapping down. And I talked about this last week. If you go back and you watch last week's midday updates, even the last couple of 2 weeks or so, I talked about mean reversion. And the majority of the gains that we've seen for the month of September have really come on 2 or 3 trading days. You had the day, what was it, September 6th. Right here we had that big break to new highs, and then you had that post-Fed price action where we had that 2-day trade here where you saw some big gains in a relatively short amount of time. Well, we tailed down, pulled back to the 8, which is this blue line. We now gap down below the 8 today. And I think we'll probably see somewhere down into the 21 in the not too distant future. I think a lot of traders were looking for this, pullback and then new high trade again. And it's just not happening. Generally, when you get these fast moves, which you saw over the last couple of weeks, it is now, building an argument that we may have seen a top for a little while. And the reason I say that is you just don't see stocks at the same type of price action that we saw even 2 or 3 weeks ago. So market here, breaking the 8, and we have this level support down from this prior base and also into the 21 EMA, which is right around 144, the low 144 area. So stay nimble, stay light here. I suspect if we can't get and close back above this 8 EMA, the market might try and push lower. Possibly into the end of the day, into tomorrow, and so on and so forth. We do have a Jewish holiday this week. Yom Kippur is Wednesday, so I suspect some light price action going into that. But I would stay with this chart again. Still not a bad trade. Still, uptrend intact as long as this 21, can hold, and we see some buyers step in here. I prefer to be a buyer of the market generally down in this area. Let's talk about Apple. Apple, interesting chart here on the weekly, and the theme for me at least with talking about Apple over the last couple of weeks, a couple of sessions, if you will, is that I was calling it a tired long, where the price action just didn't have the quite the same manic upside that we have seen in the stock over the last 6, 7, 8 weeks, and even well before that. I mean. We saw new highs, but we just didn't see that impulse or that momentum kick into that trade. And the interesting thing to me was the way that the weekly chart closed. Very small doji price action. And we start the week, we've already undercut last week's lows on this morning's gap down with iPhone sales over the weekend. And I suspect that this one might probe lower over time. It just doesn't seem like it has that same, full throttle, fifth gear, I'm a buyer on every dip type trade. And today's candlestick, although we have seen a little bit of a short-term bottom here, you can see here's a 5-minute, we gapped down, traded as low as about 683 before snapping back and sort of just languishing here intraday. Could we rally up again and fill this open gap? Absolutely. This is Apple, but the trade to me just doesn't quite have the same upside momentum that we've seen. New highs last week. For the better part of last week, you can see these. Every day we sort of made a new high, but with each new high, there was just that lackluster sort of indifference, if you will, about buying new highs. And today we're seeing that a little bit of a sell-off and already undercutting last week's low. So we're going to keep an eye on how this plays out, possibly into later in the week. A notable here, Google, and it's been a notable, just continues to ride these averages. Breaking away here, you can see it's starting to accelerate to the upside. And actually today we pierced or tested prior all-time highs. I'm going to go back and I'm going to show you a weekly here. This is Google's weekly, and you can see the all-time highs back from, I guess it was 2007, November 2007. Prior all-time high was 747 and a quarter, and we touched today's high. Let's just look at today. Roughly that price, today's high. As it stands right now, it's about 1145. Today's high was 747.28, so we made a new high by just a couple of pennies. Starting to tail down a little bit here as we approach the lunchtime hour. Be careful. about being a buyer. You don't want to chase highs. You don't want to be a buyer of the stock up here. You'd rather be a buyer on a controlled pullback. This is now the 7th, 8th straight up day. So chasing the stock at highs as it starts to break away from these averages on the daily is just not the smart place to get involved. If you missed this trade or you didn't participate in this long, it's okay. Well, if it's going to be a good trade, it'll base up here, it'll pull back, it'll give you a buyable setup at some point in the future. So don't worry about missing something. A couple of the precious metals, we'll look at GLD here. Seems to me like it, a little tired. Got a lot of people on Friday as it gapped into, highs and then tailing back down, sitting on the 8-period EMA here. If we zoom in, you'll see that. Just holding the 8. And I suspect, maybe another day or two sitting on the 8, you might see another pullback, possibly into the 21, which is about 167 in the GLDs. So keep an eye on this one as they do seem extended here, both GLD and gold and silver. We'll take a look at SLV. Silver just barely hanging on to its 8 EMA. And I suspect you might see lower prices, like I said, in the next couple of days. Not necessarily today, but over the next few sessions. It really has been a trade, for the most part, off of the daily time frame. For those of you that are day traders, I know there's a lot of day traders that like to tune in and hear what we have to say. You're not seeing a lot of that impulse and that momentum happen on your smaller time frames, your 5-minute charts, your 15-minute charts, if you will, kind of languishing. This is the SLVs, even the SPYs. We did get a nice little buy setup here off of this gap down, but not a lot of fury in this trade. And I know day traders love momentum, so you're not seeing that momentum. So focus on higher time frames. These trades are developing; they're just slower to develop. Intraday, you're not seeing that fast money up or fast money down, and it is sort of a trade where you have to pick and choose your spots wisely and give the trade some time to develop. So I suspect that that's going to continue throughout this week, but we'll see. Anything can shake the tree here. Anything can change. We'll keep an eye on some tradable levels. For now, for me in the S&Ps, it's the 21 EMA. In and around that 144 area, I'm going to watch price action to see if we can get some sort of setup to maybe step in for a calculated long trade. So stay nimble, stay patient. As always, a planned trader is a profitable trader. Have a great day. I'm Laz, and I will talk to you on the VTF.
Hi, I'm Scott Redler, Chief Strategic Officer for T3 Live, and I would like to invite you to join us on October 6th and 7th in New York City for our first annual T3 Live Active Trader Super Conference. The 2-day event will focus on what we believe to be the 5 keys to being a successful trader. We will teach you the strategies, tactics, and mindset we take to the market every single day, and you will leave the Super Conference with a personal step-by-step success blueprint. Visit t3live.com and click on the Education tab on the top of the page and watch preview videos of this event. Seats will fill up quickly, so be sure to reserve yours today. My colleagues and I look forward to meeting you. Have a great day.